Welcome to another weekly market update. Jim here and reporting in after the market closed on the 22nd of February 2019. Here's where we look at the big picture and the short-term picture, and we have just a good look round generally to see if we can see any early signs of anything at all. We're looking, down the road at booms and recessions and all kinds of things that the markets help us predict, as well as keep our own portfolios and short-term trades aligned with it. We always start off with the weekly chart, the long-term chart of the S&P 500, which is right here. Each up and down of these little pegs is 1 week of price action. And that's kind of smoothed out for us by this 40-week, this blue line here, which is the average sort of price over the last 40 weeks. And the red line here is the 70-week. My system called a brand new bull market back in 7th November 2016. It said to get out and go to cash on 22nd of October 2018. And there the system sits and has sat for a while. And everything, we're going to see, was it going to go into a fall? And I've been saying for weeks now, we don't know. We're just waiting for the market to tell us. Is this thing going to go full 2008 financial crisis, or is it just going to kind of reset and bounce forward? And so what we've been seeing is this very impressive bounce here that has really defied gravity, as I've been commentating on. And it's just really powering ahead and looking good. So no sign, I would say, of that whole full-blown financial crisis. It's saying, not even saying a recession at this point. There are some conflicting signals, I agree. But there's definitely kind of out, I would say that the market is saying kind of out of the woods from a danger point of view. Having said that, it's not yet, using my system anyway, it's not yet saying brand new bull market. My system, my kind of big macro, big picture system has us still in cash. That doesn't mean we're not going to get spectacular rises up, case in point of the last few weeks. As I say, it's a very long-term system designed to protect from the downside as well as enjoy the upside. And because of this action here, then this was pretty dramatic. The market's still got a lot to prove to my system. So this moving average here is kind of leveled out. It's kind of flat, as opposed to curling over much more ominously. But this flat kind of sideways moving average, it really sort of aligns with my system saying cash. It's almost like sitting on the sidelines waiting to see what happens next. And that's where it is right now. But there's no reasons I can see on my radar to doubt this aggressive rally. The market had a big wobble, looked at the edge, got close to the edge actually, and turned right around. Here's the short-term picture, zooming in on 6 months now. Each one of these is a day-to-day action, and that's just a very concerted uptrend. There is no sign of giving up just yet. Yes, it's a very overbought, stretched market in the short term, but it doesn't care. It's stayed overstretched now for several weeks. Everything we're looking at here, all signs looking good. Most importantly, it made it back above its very important 200-day moving average. It's a very important average it's looked at, and doesn't show any signs of pulling back. For the short-term picture, it's as I say, the long-term picture, say cash neutral. Short-term position, it's hard to argue with the trend. Who knows what's going to happen this week? But the market is still in an uptrend until proven otherwise. Let's look around the world a little bit, see what else is going on. Let's look at China, because I've been looking at that recently. And China has also defeated it. Again, it was pushing down here. It looked at the edge, and instead of turning around right there, which it was in a perfect position to do so, actually start going south. No, it said no, and it just carried on higher, and this week it just powered ahead even higher. So the global economy, it seems, kind of had a wobble, looked over the edge, didn't like what it saw, and just powered on higher. Let's look at copper, which is always a good indicator of what's going on. Doing a real thorough, good look round this week. Copper was another one. This one was just set to, it was a perfect short actually in that position, and this just last week it said no, I see something. This is an important thing. We're getting confirmations here from different things saying no, not going to have a recession just yet. Copper bounced higher instead of turning lower. So that's kind of messed up the bearish argument. Now, one thing that's also been going on, I want to draw your attention to, and this is a commodity trade with my gift system actually, is because we had all the signals with that, is gold. Now, gold, if you look at the big picture chart, is very wobbly, all over the place, kind of moving averages everywhere, pretty trendless until you look at the daily chart. And what we've been seeing here is some very interesting action with gold, not to mention the large commercial interests really not, going quite long on gold. They're not short on it anymore. And you can see these steps forming here at 121, 123, 125, 127. And just this week it pulled back in a perfect step pattern to 125, which is a great entry point for gold. It looks like this could be, the start. A lot of things, a lot of indicators lining up here for what should be a sustainable rally, if not a brand new bull market for gold. I don't know what the market is seeing. Maybe it's saying that, pulling back from interest rate rises. I don't know. I don't care. I'm just going to follow the trend. And it looks like a powerful one that could be in motion right now. And early days to jump on this, as I say, stepping up there, looking very good here. At this stage, 125, 125-ish is a great entry point for that. So that's all for this week, and I will speak to you next time.